Hello and welcome to this month's the Proptech Panel. I'm Jennifer Harrison and I'm the Vice President of the Proptech Association Australia. We are the peak body for PropTech ventures in Australia. And every month on the fourth Tuesday at 12 o'clock midday, we host a webinar on a topic of interest, usually with 3 expert guests. Before I introduce today's guests, however, I would like to acknowledge that I am on the land of the Waller Medical people in Sydney, and I would like to pay respects to elders past, present and emerging. And on behalf of the association, I would like to acknowledge First Nations people all across Australia and their connections to land, water and community. I'd also like to thank Stone & Chalk for being our event partner. Stone & Chalk are a foundation supporter of the PropTech Association, and many PropTechs, also many fintechs, many medtechs, many edtechs, many startups and scale-ups in Australia call Stone & Chalk home, either at the Sydney Startup Hub at Wynyard or the new facility at Tech Central or in Melbourne or Adelaide. Now, today's topic is Proptech+Fintech Fusion, because there are many places where property and finance intersect. And we're talking about financial fixes today for residential property problems, like how do you know how much you can afford to pay for your new house when you haven't yet sold your old house? Or for example, how actually are you going to get the cash to put down the deposit on the new house if you haven't yet sold the old house? And they're problems that are pretty perennial for owner-occupiers in the residential market. If you're a landlord and you're an investor in property, if you wanted to use your investment property as a tap to get some additional finance for whatever reason, traditionally you'd have to go through a long application process. It's much, much simpler, however, if you can simply tap into some rent in advance. So today on the panel, we've got 3 founders who are in this very exciting Proptech+Fintech Fusion area. So let's go and meet them. My first guest today is Dinh Fraser, who is the founder of Brickfloor, were the winner at our recent PropTech Awards of Most Innovative Startup in the Ownership, Affordability and Finance section. Welcome, Dinh, to the panel. How are you today?
Very well, thank you, Jennifer. Great to be here.
And where are you joining us from?
Up in Sydney today.
Ah, excellent. Where are you normally?
Normally based in Melbourne, but up here for a few investor meetings for the next couple of days.
Great. My second guest today is Mark Macduffie, who is a co-founder of Downsizer.com, and Downsizer.com was the winner of the PropTech to Watch Award at our recent PropTech Awards. Hello, Mark. Thanks for joining us today. How are you?
Hey, Jennifer. I'm doing well, thank you. I'm joining you from the Gadigal country here in Sydney.
Lovely. Thanks, Mark. And my third guest today is Godfrey Dinh, who is the founder of Futurerent, who have very excitingly just last week announced they've closed a $9 million Series A. So congratulations on that, Godfrey. Thanks for joining us today. How are you?
Thanks very much, Jennifer. Yes, we're great and been very busy and glad to be here with you.
And where are you joining us from?
Joining from our offices in Sydney on Gadigal land.
Perfect, thank you. Dinh, let me come to you first and let's have a bit of a chat about Brickfloor. Can you explain to us, please, in a nutshell, what is Brickfloor? Give us your elevator pitch.
We have a couple of different products, but our core product is called a market price guarantee, which is effectively an upfront commitment on your home, guaranteed for the length of your sale campaign to give you certainty and peace of mind when you're selling your home.
Okay, so if people weren't able to access something like a market price guarantee, what challenges would they be facing when looking to sell their home?
As you'd know, and particularly if you've sold before, you'll understand that selling is one of life's most stressful events. It's up there with death and divorce. So it's a really high pressure, high stress scenario with a lot at stake, right? Because often it's your most valuable asset that you own, and Aussies have 51% of their net equity tied up in their home. So when they come to selling that home, there is a lot riding on it. So to give certainty and peace of mind in a really super stressful process is really our sort of core claim and benefit. And then there's a couple of other benefits that our customers receive. So really they're able to leverage, or their agents able to leverage our offer in market to ultimately get a better outcome for that seller. So having an offer in your back pocket at the start of the campaign allows you to leverage that number and get a higher outcome. And on average, our sellers have achieved an 8% higher sale price through their agent leveraging our offer in market. And it also has led to the creation, which I'll go into a little bit more detail later, of a new product that will allow people to safely buy before they've sold. So having certainty on the sale that you go out and bid with confidence because you know exactly what you've got in terms of what's safe to spend.
Yeah, absolutely. I think you mentioned there the stress and the peace of mind. There are a lot of moving parts when you're selling a house, particularly if you're trying to buy another house at the same time. Would you say it is that certainty and that confidence that is people's primary motivation rather than the finance side of things, or is it a bit of both?
I think both are really important. Like, I think having the finance to purchase somewhere else is obviously critical, but at the same time, what we've found with our customer base is often they'd have the financing or pre-approval in place, but they weren't able to action that and actually step forward and buy because they hadn't sold their current home. So they didn't know exactly how much they could afford to spend on their next place. They might have pre-approval, but really often that was conditional on effectively their current home being sold. So having both the sales certainty and also the financing certainty to purchase combined is what we feel is really compelling. And not all of our customers were selling to buy, but basically 70 or 80% of our customers have been selling in order to buy. There were sort of 30% of our customers, we call them the 3Ds. Basically, they were selling because they might have gone through a divorce, for example, or they could have a debt issue and just need to sell, or it could be a deceased estate. That was the minority of our customer base, but really most people are selling in order to buy based on what we've seen in the market. And they need both. Yeah, they want certainty that their current home is going to sell, and they want the financing, obviously, to set them up for the purchase as well.
And would you say there are any differences to these problems and challenges depending on whether we're in a rising property market or a cooling property market, or is it equally applicable?
I think it's with our core product, our market price guarantee, it works really well in both markets, but for a different reason. So in a weak market, which arguably, we're coming into now, people really want certainty and peace of mind when they're looking to list. And so you don't really want to list your home and there be uncertainty around whether it's going to sell. Sure, you won't have to pay your agent's fee, but you'll have incurred your 5 or 10 grand on marketing costs with realestate.com and domain, etc. So it's a big commitment and a big decision to sell. So in an uncertain market, we kind of position more around our product being that safety net and security for the seller. In a strong market, what we've found is that people want to buy first. So there's a lot of friction in the market around if you're looking to upsize or downsize, do you sell your current home first and then do you buy? Or do you buy your next home first and then sell? And in a strong market, it makes so much more sense to actually buy before you've sold. But then again, there's a lot of risk if you've ever done that before and you've put a deposit down and you've bought first and you don't have certainty that your current home is going to sell. That is a super stressful scenario. And there's often can be a shortfall where you've paid a little bit too much for your next place and you haven't quite got the right price for your current home. And you're running around family and friends, trying to find that little gap, or worst case scenario, you lose your deposit because you can't actually step forward and move forward on that purchase. But we enable people to in a strong market to buy first with confidence, knowing that there's a guaranteed sale outcome. And in a weak market, we give them certainty and peace of mind that the home is guaranteed to sell. Yeah, we find that our product works well in both markets, but for a different reason.
Okay. And how are you determining the market price guarantee, and how are you using technology?
Yeah, so we look at 50 data points of information. So we have a home seller come to us through a channel partner or directly. We gather up 50 data points of information pertaining to their home and really relating to the value of their home. So we look at the condition of their kitchen and bathroom, and we rank the conditions of their different attributes of their homes. And we feed that into our own sort of pricing algorithm, which we are sort of building out, because at the moment there's no perfect pricing algorithm in the market. Like you look at realestate.com and Domain and CoreLogic, all of these AVMs are quite wildly out. And so we think there's a way of improving them through looking at non-traditional data points, which we're hoovering up through our 50 data points of information. And we basically use that information, recent photos that the seller provides, and also typical things like comparable home sales, and use that information in totality to basically form a view around the value of the home. And then we make an offer at that price. And the seller has 7 days to accept our offer. And if they do, we then go out and do a physical valuation. But really, it's about sort of, for us, big data and getting more and more deep data around the seller's homes that we're looking to put an offer out on, and then using that information to form views around value, and ultimately building that into an AVM or an automated valuation model is the game plan as we scale.
Great, thanks for that. Do you have a typical customer or an ideal customer? And how do you find your customers? What's your go-to-market strategy?
Yeah, so the ideal customer is a motivated seller for us. So someone that really wants to sell, either because the 3D issue I mentioned before, or because they've found the next place and they're really keen to move forward on it, but what's holding them back is the sales side. So we see there's a lot of, relating to that second point, some of the big channel partner opportunities that we have that we're looking to execute on are with players such as Big Four banks and mortgage brokers. And we're looking to create a new home loan category with a Big Four bank that will let a buyer safely buy before they've sold. So a buy now, sell later home loan product powered by Brickfloor. And really, that was off the back of our learnings that we saw that 70 or 80% of our customers were selling in order to buy. And we were facilitating and enabling the purchase to occur because we provided the sales security. So we thought, hang on, why don't we wrap this up with sales certainty through our market price guarantee with a competitive home loan so that people can buy first. So that type of customer, a seller who's looking to sell because they've really found their next place or they want to buy, either upsize or downsize, has really become our ideal target because we're seeing that we're solving a real core problem for them and removing that friction around, do I sell first and then do I buy? Or buy first. We're saying, actually, you can confidently buy first, knowing that your current home is guaranteed to sell.
So there's that high intent on the seller. And in a minute, Mark, I'll come and talk to you. We might put another D in there, which is downside. But Dean, I'll stay with you for the moment. What kind of feedback and testimonials are you getting from people?
Look, I think for me personally, as a founder of Brickfloor, like that's been the most rewarding part of our product was when we were having customers say to us, look, are you really going to guarantee our sale price? We've just gone through the auction. Are you really there? This was in the very early stages. And we said, of course, this is our business model. And the customer would say, well, can I celebrate and have a wine tonight with my wife because my home is sold? And the only way now is that there's upside. So all that can happen is I can get more price through testing the market. And so that was amazing. I said, look, yeah, I'll have a wine separately tonight to celebrate your home sale as well. And he went on to tell 20 of his best friends about the product. And he's now a key advocate and describes the product as a revelation, a game changer, and really beautiful language that really makes us feel like we're onto something special. And now it's about scaling that product market fit into market. Yeah, really strong testimonials, even from industry participants too, saying one leading agent said it's one of the most innovative products he's seen in his 40-year career in real estate. So really strong feedback that we're super, super proud of.
Have you discovered any unexpected benefits or surprising use cases along the way?
Look, more around our sort of property fund, because part of our market price guarantee, through that product, we end up buying homes into a property fund. And we found that we're getting interest from millennials to invest into that fund because they were effectively saving for their first home deposit via cash at bank savings and getting a 20 bips or 50 bips per annum return and going backwards against the property market. And they were saying, we want to hedge effectively. We want exposure to the market. And so we've now decided to open up our property fund, which is a smart property fund that's beaten the market by 20% over the last 2 years. So yes, the market's had a great run, but we've even had a better run because we're buying great homes at smart prices through our market price guarantee. But really opening up our property fund to millennials as a first home deposit saving mechanism. And we've built an app now around that, an investment app that we'll be launching pretty soon. So that was a learning for us because we're looking to institutionalize residential property as an asset class, i.e. get instos into super funds and the like into the property market as a diversification strategy away from equities potentially because there's less volatility. But now we can see that there's another use case, which is like millennials wanting exposure. And the idea is to really disrupt cash at bank savings and say to a millennial, if you're saving for your first home deposit, don't worry about necessarily putting all your money in the bank to save because it's not correlated to the asset class you're trying to buy into. Put it into the property market from day one so you get on the property ladder in 9 minutes, not 9 years, and ultimately save faster and buy sooner. So that was a really interesting learning for us.
Lovely. Thank you so much. Anything else coming up on the product roadmap that you can share with us?
Other than the home deposit saver app, we are, as I mentioned before, we're now tying up our market price guarantee product with a competitive home loan with a Big Four bank. And so we're about to launch that product. I think when I say about to launch, it always takes a bit longer with big players. So I think towards the end of this year, we'll be creating a sort of a market first, a global first, we believe, buy now, sell later home loan product that will be powered by Brickfloor. And it will let you, as I mentioned before, buy before you've sold with confidence and certainty. And based on our insights, like 90% of the market would prefer to buy first. if it's safe to do, and we make it safe through combining our market price guarantee product to the home loan.
Yeah, and less work in assessing. I think it's called peak debt. If you're going down the traditional bridging route, it's quite scary stuff. I know a couple of people who've done it, and I don't think they'll ever do it again. So that sounds like a great thing to have coming up. Thank you so much for telling us about Brickfloor, Dinh.
Thanks, Jennifer. Pleasure.
Mark, let's have a talk about Downsizer.com. Now, I always start by asking people to say, in a nutshell, give us the elevator pitch.
Downsizer we think it's perfect for this panel in particular because it's a unique blend of digital technology and a new financial instrument. We are on a mission to help an entire generation stop worrying and start living. We do that by allowing homeowners to buy their next dwelling off the plan with no cash deposit. So developers are protected from downfall events, and also downsizers don't have to pay any deposit.
Excellent. So what are the problems and challenges when you're downsizing? What challenges and issues would people be coming up against if Downsizer.com didn't exist?
For us, we're a multi-sided platform. So there's two sides of the problem space, if you like. As a buyer, finding the deposit to secure your future home can mean unnecessarily draining your nest egg early or seeking expensive bridging finance. That's if you have enough regular income to qualify for bridging finance, which a lot of our downsizers don't have regular income because they're no longer working or they're in their retirement years. For example, we had a recent buyer, 79 years old, lived in his house for 30 years and doesn't have liquid assets to buy a deposit. He actually has a line of credit, which was given to him 15 years ago by one of Australia's biggest banks that's accruing interest on a daily basis. So he, in his words, feels trapped. So that's on the purchaser side. For property developers in another cycle of really difficult times for property development and development industry, not just banks making it harder to get construction funding, but also margin compression and rising inflation and interest rates means there'll be less qualified buyers, less approved mortgages in the market, which means less purchasers to buy the stock that the developers are building. So that the developers and the agents we're talking about are concerned about how they'll continue to meet their sales targets in these with the headwinds that they're facing in that industry.
Yeah, we did a panel, I think 2 or 3 months back on property developers and how Proptech can help them. It's definitely true that property developers are feeling a little bit of a squeeze in the current market.
Absolutely.
Mark, tell us a bit more about how you're using technology in your solution.
Yeah, as I said, we're a unique blend of technology, digital technology at the front end. We use 14 different APIs across the process to make the user experience as seamless as possible so that if you are a qualified buyer that has sufficient equity in your existing dwelling, we identify you digitally. We identify, we check the value of your current dwelling, we check you own the current dwelling, we check your debt position, we check that you haven't been made bankrupt, and all of that filters into our kind of qualification. It's not so much an algorithm, but our kind of risk engine that allows us to qualify downsizers in real time. There's 2 states that we can't do that in at the moment because the land titles are 48-hour returns, but we use those 14 different APIs from industry bodies to help us qualify buyers, ideally in real time. But the digital platform doesn't actually work without the financial instrument. So that's why I love this panel topic, because we spent a lot of our time on creating a unique downsizer bond financial instrument that's allowing us to do this cashless deposit for this segment because they are less risky purchases, they're higher quality buyers, and we're educating those buyers and developers that in a difficult market, the downsizer market is a stronger buyer, and therefore the developers will pay the premium. So in our model, the downsizer does not pay for the bond, the developer pays for it.
Mm. So Mark, the next question I usually ask is, do you have an ideal customer? But perhaps you could answer that by giving us some information about what actually is downsizing and also what it isn't. So I think some people might think it means literally you have to move to a smaller house, but that's not necessarily the case, is it?
Yeah, thank you for asking that. There is because I was prepared for what is your typical downsizer, and we normally respond to that by saying, actually, the stereotypical downsizer is someone that's pre-retiree, just moving towards retirement or planning. But actually, our first transaction was an investment. It was a self-managed super fund. So the instrument works the same way. It doesn't matter whether you're downsizing in size, but really you have to have equity in a current dwelling more than the dwelling you're buying. So we don't discriminate or check or verify whether or not it's a smaller house or anything like that, or what your circumstances are. Because it could be for any reason. It could be for health reasons. It could be to create a nest egg for retirement. It could be to be the bank of mum and dad. So to help your kids onto the property ladder. What we're seeing is nationally, we have some incredible data research that points to 1.68 million homeowners that are planning on downsizing in the next 5 years. And we have great data on when they will move. So 66% of them expect to move in the next 2 years. And this, again, it isn't limited to 65 and above. It's increasingly there is an ATO tax incentive that allows downsizers that are downsizing their primary dwelling to put $300,000 into their super tax-free. That's $600,000 as a couple, and that threshold is lowered to 60, and we anticipate that will lower to 55. So it's really on us, and we're continually educating our buyers and our sellers that, if you believe that market is going to drop, why wouldn't you stop worrying and start living? Sell your property now, pay off your debts, have a smaller property, perhaps move to regional Australia, and you can buy a lot more for your money and start enjoying yourself. You don't have to wait till you're 67.
Yes, I think there's a broader conversation here about what does life look like in your 60s and 70s, because it used to be that people retired and then maybe they lived another 10 years. Now people retire and they could live another 20, 30 or 40 years. We're starting to see it much more normal that people are going to live to be 100. So that makes life very long and very big. I was going to say, could you tell us a little bit more about how you're going to market, and how much do you think the broader real estate industry really knows and understands about this downsizing boom that we're just on the cusp of?
Yeah, two questions there. So I'll go to market. We've just finished our pilot phase. We've only been in pilot for 4 months. We've been doing a lot of experimentation in different marketing approaches and funnels, because our downsizers typically hang out in different places. You can actually spend quite a low amount of money and find these downsizers in Facebook. It's the demographic in Facebook that's growing, which is interesting. But we've also been experimenting in lots of different channels. So really, because we've got the two sides of the equation, we're working with industry partners like iBuyNew to get the stock side of our equation listed. So we've just agreed and signed with our partners iBuyNew. We're really thrilled to be working with them. Urban Developer as well is working well for us, engaging and educating those developers, which leads me to the kind of second point that you're asking about, is that do developers and agents really understand this? I think the answer to that in the pilot so far is no, but I can tell you that since we came out of pilot at the end of the financial year, we've onboarded 8 agents and developers in 3 weeks through inbound requests, because they're seeing, as I mentioned earlier, developers and agents are worried about how they will continue to make sales momentum when there's less mortgages approved in the market. So we're educating, we're creating lots of good content that kind of helps engage the downsizers where they are, but also on the benefits for developers and the buyers as well.
And I'd imagine downsizers are very good customers, I should imagine, for property developers, because they are high intent. They're doing this for a life stage reason, and they're also asset rich. They just haven't yet sold the family home.
Yeah, absolutely. We, as I said, that we're trying to educate those buyers to basically, they have buying strength in this market. And if they know that and they're empowered to do that, we're encouraging them to use our product to go to developers and agents and give them a stronger kind of footing when they're making an offer. You're right, they're absolutely asset rich. We qualify most of the interesting data that we're seeing so far is that we have interest from downsizers that have current dwellings worth just more than $600 million. So we broke that threshold last week. It was huge numbers for us. So that's people that have come to our site that have existing dwellings worth $600 million planning on moving. And interestingly, The ratio that they're looking is between 45 and 50%, and it's stayed that way for 4 months. So it's not a small downsize. It typically is like a big, it's a significant change is what we're seeing in here for the demand side of things. And I think the downsizers are recognizing that is enough to unlock lifestyle.
Mm. I should have mentioned that the extended settlement period that you get when you buy off the plan could also be quite beneficial to downsizers who need to actually manage a physical downsizing project. But as you mentioned, your cashless deposit bond is also available to investors. Is it also available to people who want to buy a second-hand dwelling as well?
Yeah, it works, provided you have a sufficient equity in the dwelling that you want to use as collateral. You can buy it as an investment property or self-managed super or any purpose, so long as we can verify that the net equity in that guarantee property, if you like, is clear. Or we can do a combination of that plus cash or savings. So we just need to be able to see that you've got money that meets the net equity position to buy off the plan. And then our first buyer is 18-month settlement for their self-managed super fund. They have plenty of time to organize funding and plan how they want to manage that property as well. So the duration of settlement is anywhere up to 48 months for us. That gives plenty of room to plan.
And Mark, what's coming up on the product roadmap for Downsizer? What's next?
What's next for us? I salute Godfrey. Congratulations on your raise. We're slap bang in the middle of raising now to scale nationally. The brakes are off, if you like, nationally, and we're trying to onboard as much stock as possible. So you'll be seeing more PR and more engagement to try and get more stock to meet the demand. Then we were actually selected by Austrade as part of a mission to London Tech Week. So we see very similar demographics in the UK. We would hope we're aspiring to get a proof of concept in there using the same technology, which has been built for scale into other jurisdictions. So we'll be looking to do a proof of concept in the UK in the next 12 months. We're also looking to break out some of our components as software as a service so that we can sell this on to our developer friends without the bond, because we've built plenty of tools that make their lives a bit easier as well. Fourth thing would be, if we know the wealth management opportunity that's being released, because we know exactly when a downsizer will exchange on their future property, and we know how much equity they will release. So that in itself is a really great adjacent opportunity for us to go after with our funding if we're lucky enough to complete our round.
Exciting. Thanks, Mark, for telling us about Downsizer.
Thank you, Jennifer. Thanks, everyone.
Godfrey, let's talk now about investors who own an investment property. And typically, if you had some equity in that investment property, you could go to the bank and top up your loan, but that would require you to do a lot of paperwork, and the bank would have to go through a full service responsible lending assessment. You, I think, have spotted a genius little niche. Can you tell us a little bit more about Futurerent? Give us your elevator pitch, please.
Thanks, Jennifer. Yeah, so we give property investors up to $100,000 of their rent in advance, which is really the simplest way for investors to access the money that they need to keep growing as an investor and to grow their wealth. So we're helping people with funding for renovations, for deposits on their next investment property, for their small business, any other big ticket item or investment. And practically most people, they get, say, a year in advance and they pay it back over 3 years from a third of the rental income. And the key difference with Futurerent is you're actually not borrowing money. So it's a much simpler solution than dealing with the banks. And our solution is specifically made for property investors and with all of their needs in mind.
Okay. So do you have some flex in there? That what happens if I have a void on my property for a couple of months?
Yeah, so the way we've set Futurerent up is with all of those things in mind. If the property is vacant because you haven't borrowed money, you don't need to make any repayments. We simply resume the payments once the property is tenanted, and we're paid back from the rental income from the property manager. So you as the investor, you don't make the payments back to us. Futurerent is paid back as and when that property earns income. And it means you're in a much lower risk position as an investor. You're simply receiving your rental income in advance, and that rental income is being paid back as and when the rent comes in over time. And in doing so that way, it's actually set up in a way where it doesn't even cost you anymore. There's no late fees, there's no penalties, there's no interest. The interest doesn't compound, all of those sorts of things. You know exactly the amount of money that you're going to get up front, and then that's paid back, and you know exactly what it's going to cost you.
Wonderful. How are you using technology to provide this?
Yes, so we are addressing a very big market. Residential rent in Australia is $48 billion a year. And because we're delivering something that has never been done before, we've had to really build our own technology to onboard, process, screen, and manage large portfolios of residential rent and clients. So we're an entirely digital business, and it's all about delivering an incredible user experience and reducing our cost to serve, and doing it in a really prudent and scalable way that allows us to deliver future rental income to the consumer at the lowest possible cost and give them what they want, when they want it, and how they. So practically, that means that people apply online in under 2 minutes, and they get up to 2 years worth of rental income in advance in 2 days. And it's a really seamless digital experience that also has all of these really great features for investors that are created with all of their needs in mind.
And is there any complication if, say, my husband and I own a property together? Or what if I own an investment property through my super fund, for example? Are these complications, or is this all good for your solution as well?
Yeah, so we deal with, obviously, a lot of people own property with their partner or family members or friends, and that's completely fine. We also deal with companies and trusts. It's totally fine. Superannuation is not something which we currently deal with, but yeah, it's overall a really seamless experience for all of those counterparties.
Do you have an ideal customer? And also, how are you going to market? How are you finding your customers?
Yeah, so it's interesting. We're servicing a really prime segment of the market, which is, I think, similar to some of the other people who have been talking today and different to a lot of the other fintech sort of world. Most of our clients, they actually have the funds and they've got the savings, but they choose to use Futurerent because they want to preserve that sort of personal savings, and they just want to work their rental income a little bit harder. So the primary reason why people use Futurerent is for wealth creation. It's all about being able to get more out of their investment properties. So that's, as I mentioned, funding for renovations, for buying additional properties, for investing in whole other areas of their lives. I think that's the one common thread that really links our clients. They know that they want to create wealth. They've set out to do that by investing in property, and we're just providing them another tool to be able to do that better and more powerfully and more effectively.
And how are you going to market and making people aware of your solution?
Yeah, so we've built the business really as a direct consumer business initially, so all largely digital channels. But in saying that, we have done a little bit around the sort of B2C model. I think it was really important for us to first go through the direct to our customer to get the learnings that we really needed to gather and have those direct conversations and tighten the feedback loop to get the best level of product market fit that we could possibly get. Now that we've got a really good handle on, we're working with industry, and that's across a whole range of players in the property ecosystem, from conventional sort of real estate agents through to mortgage brokers, property wealth creators, and then through to the less traditional sort of more Proptech type of solutions as well that are also adding a lot of value and being a significant player in the real estate space. I think there's a lot that's happening in real estate, and the role of the real estate agent is largely changing, and real estate agents are constantly looking to create more value for their clients. And through our solution, which really helps property investors grow, it's enabling the industry to really grow with their clients. So by helping their clients provide better quality housing at higher rentals and purchase more property, the agencies are also growing their rent roll. And we're doing a few other sort of slightly more innovative things as well, which allow agencies to use Futurerent as a bit of a growth tool to help them sell more property and manage more property.
Yep, absolutely. Any favourite testimonials or positive feedback that you've received that you can share with us?
Yeah, look, I think the feedback that we get from customers is really incredible in that they're just blown away by the experience that they have and how different that is to what they would get if they were dealing with the bank. Generally, the banks, they've been built for owner-occupiers, not for investors. And investors are a big segment of the market. Investors, there's about over 2 million property investors in Australia. It's about 1 in 5 households in Australia own an investment property, and they're really everyday Australians that are trying to create wealth by investing in property. It is a $10 trillion market in Australia. It's 3 times the size of superannuation, 3 times the size of the share market. And the biggest challenge that they have is accessing capital as an investor. It's a very capital intensive game. So yeah, we're getting really great feedback from all of our clients. We're getting some incredible use cases in terms of seeing the additional value that people can extract from their properties with relatively small amounts of money. We had one client, Darren, up in the northern suburbs of Darwin, who spent $25,000 on a renovation and was able to take the rent on the property from $500 to $800 a week, which is $15,000 a year. So over a 60% return each year just on that simple renovation. And that's really very common, right? It's actually not that difficult to be a bit more scientific about investing in property and to actually do quite well when you think about property through more active strategies and asset management plays. But the biggest barrier to doing that is that access to capital. So we're allowing people to be a lot more active, not so passive in terms of having to really just buy a place, sit on it for 5 to 10 years and hope that the place goes up enough in value for them to be able to extract enough equity to move on and do the next thing. Yeah.
Speaking of access to capital, you've just accessed the capital to close your Series A. Congratulations again. Can you tell us a little bit about how you're planning to use the proceeds of the raise? What's coming up on the product roadmap and what are your growth plans?
Yeah, so the big thing for us is now trying to really focus our attention on delivering as good an experience for our partners and their clients as we have for investors who have come to Futurerent directly. So it's really building out the B2C offering and expanding our national presence through a lot of the integrations and partnerships and technology that's going to make this process even easier, even faster and more accessible for the investors that want to keep growing and working their investment property harder. So yeah, that's really the focus for us this year, and just to continue to deliver on the sort of growth that we've had. We've grown over 10 times in the last 12 months and had a phenomenal run. So we really just want to continue to add value to our clients, but also the partners that we work with as well.
Fantastic. And before, as I say, if anyone does have a question for anyone on the panel, you can drop that into the Q&A function for the Zoom webinar. Godfrey, I was going to ask you, who came up with the name for the business? Who is responsible for Futurerent?
It was great to say about my creation as well. I think for us, the reason why we really like that name is that it's really quite pure and simple and explains the business for what it is and the key difference with the business, where with Futurerent, you're not borrowing money. You really are simply just accessing your future rental income. It's a much better, simpler experience, and it's something which no one else, as far as we can see in the world, is really doing.
Great, thank you. Dean, same question to you. Who's responsible for coming up with the name Brickfloor? Unfortunately,
that was myself as well. I think when I was going for a run 4 or 5 years ago and wanted to have the connection to a home, obviously the brick and the concept of a floor price, a guaranteed price, combining those two together. So maybe not that super creative, but yes, that was one of my idea.
Yeah, no, the names work really well. And I can imagine once you'd had that thought bubble and when you went to see whether the name was available and whether the domain was available, you might have done quite the happy dance.
Yeah, that's right. And I think it's funny with a startup business because you start, I think as all of the participants today have alluded to, you start broadening your product set. And then I think for us at some point in time, we have to sit back and think, is Brickfloor still the right name for a business that also helps people buy first and helps people save faster through an app? And so while it made a perfect sense at the outset, we're contemplating, does it make sense for our future set of products? And is there any merit in exploring different names? But there's different opinions on that, but I won't bore you with all that detail. But yeah, that's the context.
Oh, that's okay. And Mark, thanks for sharing in the chat that you weren't the original owner of Downsizer.com.
No, our organization's actually called Block Builder Pty, and when we started our journey 2 years ago as a thought bubble, it was very much a product that was blockchain based that would help developers. So Block Builder was the entity we formed. And we looked at as we did customer centered design through 6 months, we figured we landed on this cohort of downsizers, which is much more consumer facing. We searched for downsizing, downsizer.io, all that kind of stuff that everybody does in startup land. And 3 months later, for some reason, I don't know why, I'll never be able to explain it, I looked at the GoDaddy again, and downsizer.com was available. And I couldn't believe it. I put it in the basket, phoned up GoDaddy, and she says, "Oh, That's a highvalue.com address. And they didn't pay their bills for 3 years, and it became available yesterday. So I phoned just serendipitously. Serendipity took over, and yeah, we secured that by pure fluke.
Excellent. Maybe it was a sign. Perfect. Do you have a question? Please do pop it into the Q&A, because we've got a few more minutes, but probably only just a few more minutes. Dean, if I could come back to you, please. Is there anything that we haven't covered so far that you'd really like people to know about Brickfloor?
Not specifically in relation to the products, but I think more where, like, lots of startups, and congratulations to Godfrey as well, again, on his capital raising. We're going through that sort of process again. We raised a Series A a few years ago, and we're now going through our Series B raising, spending. That's why I'm up in Sydney, actually, spending a lot of time on the road around the capital raise process, which is, I think, less fun compared to the actual getting the product into market and getting the feedback from the customer. So, yeah, so he's going through, obviously, there's the business side and the capital side, and we're focusing a little bit on the capital raising side. But no, I think I've covered most of the things around our sort of products.
That's cool. And what's the best way for people to find out more about Brickfloor and also to connect with you?
I think just through the website is probably the easiest way, or LinkedIn as well. You'll be able to just search my name, Dean Fraser, and welcome to connect with me. I like to connect with new people. But yeah, website, LinkedIn, there's a contact form on our website that comes through to me personally. So I think that's probably the best way.
Perfect. Mark, is there anything we haven't covered about Downsizer that you'd like people to know? And also, what's the best way for people to find out more and also connect with you personally?
Like Dean, we have a free consult button on our website. You can book a direct Calendly appointment with me or one of my colleagues, or I'm active on LinkedIn as well. You can hit me up directly. If there's an ask, it's tell your mum, tell your dad, tell your granddad that it's out there. Tell them to stop worrying and start living, and get in touch with us.
Perfect. And Godfrey, anything that we haven't covered about Futurerent you'd like to mention, and what's the best way for people to find out more and to connect?
Look, I think probably the biggest thing for us now is we're really growing the team quite rapidly. So we're hiring for a lot of new roles, and we're constantly updating our careers page. If you are in the market looking for a new opportunity, please get in touch. We see a really bright future ahead, and we're addressing a really big addressable market. And otherwise, in terms of connecting, obviously, there's a lot more information on futurerent.com.au, and I'm very active on LinkedIn as well, and love connecting with new people. Yeah, please get in touch.
Wonderful. Thank you so much for being on the panel today to talk about Proptech+Fintech Fusion. Thank you very much to Dean Fraser from Brickfloor. Thank you very much to Mark Macduffie from Downsizer.
Thanks, everyone. Thanks, Jennifer.
And thank you to Godfrey Dinh from Futurerent.
Thanks so much, Jen.
This is going to be the last panel I'm hosting for a little bit. I'm going to take a break from hosting the monthly panel. They will still be happening, but another member of the team will be in my place. If you are a PropTech and you're interested to know more about the PropTech Association, you're very welcome to please follow us on LinkedIn, our LinkedIn page. You can also head over to our website, proptechassociation.com.au, and find out more about becoming a member, or you can sign up for the newsletter and you can discover some of the other benefits of membership. Thank you very much for joining us today, and watch out for the next PropTech panel, 4th Tuesday of the month, 12 o'clock midday.